Hi, I'm Melissa.
I'm Henry. So every company and their director, regardless of their size, carries an exposure related to the day-to-day management of a company. As a director, you've got a legal duty of care to the company and the various different stakeholders, whether that be your shareholders, your employees, regulators and customers. If you're a company director of a business that is struggling financially with cash flow and liquidity issues, your obligations to your founding investors and shareholders may supersede the wants of your employees that you have to let go and make redundant in order to keep the business afloat. And every single business decision like that carries an inherent risk. So it's important that you've got a policy in place to protect you. The Side A cover is there to provide cover to the directors in the event that the company refuses to or cannot provide an indemnity to the director. So they may be also prohibited to do so by law, but the main event of Side A claims is the event of an insolvency. So if a company goes insolvent, obviously they haven't got any money, which could potentially lead to personal assets of a director, so their house, car and whatever, on the line in the absence of a D&O policy. And then the Side B cover is there to protect the directors in the event that the company has agreed to indemnify them. So what happens in that situation? The company will pay the claim, and we as insurers will then reimburse the company, which would protect the financial position of the company. What are the risks to directors and officers?
The personal assets and funds of a director and officer at risk. Also, due to the change in the global economy, inflation pressures, insolvency concerns, bankruptcies are on the rise, so that are ongoing risks for directors and officers, and also the ESG efforts that a company is partaking in and whether they are on the right side of ESG. Short and sweet answer is yes. If the company has a board, if they have employees, if they have investors, shareholders, vendors that they work with, absolutely coverage is of key importance, because as we are alluding to, in the event a small business does not have insurance in place, there are insolvency concerns. In the event they need to self-fund the litigation, and also family-run businesses tend to have a little bit more personal claims, which leads to higher litigation costs.
Some of the most emotive and drawn-out claims that we've seen are from family-run businesses. So if you're a family-run business, then I'd say absolutely you need MO insurance.
And oftentimes the small businesses are the companies that don't have the internal policies and procedures in place, as well as fund reserves to help litigate.
Tech startups, life science companies, a lot of businesses of those natures.
Life science, medical device manufacturers, miscellaneous professional.
Yeah, yeah.
The safeguard and protection for the company